Shift focus stock Dabur, and the case for a chat here being there clearly seems to be early signs of consumption revival in place. They're gearing up for a better FY19. There's reduction in edible oil prices. Quite a bit of talking points. Let's welcome on board Sunil Duggal, the CEO at Dabur India, joining us on the show. Sunil, hi, good morning. Before anything else, thank you so much for being part of ETNA's 9-year journey. I'm so glad you could take time out and join us as we celebrate our anniversary week.
My pleasure.
Okay, Sunil, it's been a good few months for... Sorry, go ahead.
Yeah, after you.
Okay. No, I was just saying that it's been a good last few months for you, you know, for FMCG as a sector, demonetization, GST effects, all of that is waning out. Rural demand seems to be reviving now, and things will get only better because of monsoon, MSP. So after a 3-year downturn, will FY19 be a very strong year of earnings performance for FMCG at large?
I think it will be a year of recovery. There may not be any huge uptick in performance, but definitely it will be a significant improvement over what we did last year in particular, which was hampered by so many issues like demonetization and GST rollout, etc. So I think we are over that now. Demand seems to be coming back. It's a very mixed bag. The food and healthcare side, there seems to be a significant demand revival. Home and personal care still remains subdued. So like I said, it's a mixed bag. But overall, the picture today is much rosier than it was a year ago, where we had a significant amount of headwinds.
Rosy enough to take volume growth levels to the erstwhile peak of double digits, or that's still early days to assess?
I think it's early. The first half of the year, yes, would look better because the base is low, and then of course we'll have to meet the challenges of the second half when the base is normal. So having said that, I think high single digits seem to be almost certainly in the bag. Whether we can trend it up to double digits, it's a little bit early, but I think, like I said, the second half will hold the key.
Because of raw material costs?
Raw material cost, again, is not something which is going to be very painful unless the monsoon fails. The oil prices, of course, are high, but then it's around 30% of our mix is based on oil and oil derivatives. The rest is largely agri, and agri prices have been reasonably soft and will probably trend to remain soft if the monsoon is normal. So I'm not too concerned about inflation at this point in time.
Sunil, your foods business has been under pressure for some time now. What would you say the reason has been for this underperformance when the industry largely has actually benefited because of the shift in favor of the organized segment?
True. I think last 2 or 3 quarters have been muted. There was significant amount of competitive activity which happened around the 3rd quarter of last year, continued and is continuing. Took us a little bit of time to gear up to meet the challenges of that competition, and I think now we are back on track. We should be seeing strong double-digit growths coming out of foods henceforth, and it's also aided by category growth tailwinds. So overall, the food situation is much better today than it was over the last 3 or 4 quarters.
I just want to understand, while a lot of companies in the FMCG space are seeing a rebound in volume growth and market share, has it come at the cost of increased advertising spend as a percentage of sales?
You're absolutely right. I think there has been much higher spends, especially compared to the base quarters where the spends had been cut down to meet the challenges of less growth. So we are investing strong double digit in media particularly, and that will have some impact on margins, but I think it's for a virtuous cause, because if it drives the top line, the margin revival will happen. Having said that, I think we should be able to have a margin profile which is reasonably strong, may not be as strong as the top line growth, but still it will be eminently satisfactory.
Could you compare that? Could you give us the numbers onto how much your advertising cost can go up by as a percentage of sales? How much you see that pushing your revenue up by, and how much of that revenue growth, that's just the third part, will get translated into a range on margin performance?
Well, these are very hard questions to answer. You can never fully correlate spends with the outcome in terms of sales, but definitely there is a connection, and we would be spending, our media costs would increase by maybe 30-40% quarter on YOY, at least this quarter, and continue to trend in that direction for the balance of the year. And this obviously will drive the volume growth much higher than if we were not to spend. But exactly how much is hard to ascertain, but definitely there is a connect between the two. And I think this investment in media which we are doing is absolutely the right direction and will yield us good long-term results.
Okay. Want to understand then, Sunil, what's the pipeline like for new launches, or would you take it a little easy in the next few quarters? Well,
our plans for the current year is not to do a significant amount of new launches, as in completely new products, but to do a lot of scale up. I think when you look at our portfolio, there's a lot of small brands which perhaps have been underinvested, and significantly they lie in the healthcare space. Why not take those brands and invest big sums of money and scale them up? This comes at a lower cost, at a lower risk, and much better than perhaps getting into completely new products. So you will see a lot of the scale up happening from the second quarter onwards. I think we've got plans to do that. A lot of media spends will go into that scale up, and I think that would be beneficial for the business at the least possible cost.
What about international business? Because that's been running parallelly as, you know, almost with the domestic business. It's had bad 2 to 3 years. Now there seems to be some rebound coming in. Again, do you sense that this rebound is temporary in nature, or would you say the worst is now behind you?
I think the worst is behind us in the sense that multiple headwinds had come into place a year or 2 years ago, whether it was the Middle East issues, whether it was currency problems in Turkey and Egypt in particular, and various other headwinds which had come. Now, many of them have gone away. The currencies are reasonably stable with the exception of Turkey. Saudi Arabia has bounced back very strongly. The whole Gulf economies on the back of higher oil prices are performing better. There are still pockets of pain, but like North Africa, for example, markets like Algeria, etc., shut down, which are large and very profitable markets for us. So in aggregate, you're going to see much better performance coming out of international business this year than in the previous 2 years. Now, there will be volatility here. It's not as stable a business as the India business because it's comprising of so many moving parts. But in aggregate, the international business situation is looking much better today.
So how do you see the future then, Mr. Duggal? I mean, when you are staring at the crystal ball, how much of the growth do you think would come in from the rural side of the economy versus urban? Because we've seen that the rural demand numbers have been picking up. And in your own research, how much of that depends on monsoons?
Yes.
How much of that depends on monsoons?
I think there is a significant dependence on monsoons. However, even if the monsoon is below normal, I think there will be mitigating action by the government in forms of subsidies and other stimuli for the rural economy, given the fact that it's election year. So overall, I think the rural demand will remain reasonably robust. It's the urban demand, I think, which we have to watch out for much more than rural. In any case, rural is growing at around 1.5 times urban demand over the last few quarters, and that trend will continue, might even multiply to 2 times. So I am a little bit more concerned about the urban demand at this point in time, which still remains fairly muted.
All right, Mr. Duggal, we really appreciate you joining us as part of our 9th year anniversary celebrations. Thanks very much for taking out the time and sharing with us your business plans.
Thank you.